Sweet. Thank you guys for joining another Monday night. We'll just be discussing some broker talk, ways to source deals, ways to talk to brokers, how to navigate this market, which I think has been one thing a lot of people are kind of mentioning and talking about because I had a few conversations with people in this last week. And now that we're not on the call every week, I have a few more things to talk about when we do get on these calls. But first, just a little bit about myself. I'm based out of Los Angeles. I'm operating a brokerage out here for residential and commercial real estate here in LA. Doing multifamily out of state is kind of like the big goal. I tired of owning in LA and trying to deal with LA as well, given obvious perceptions because you guys are correct with them. Um, and really just trying to help people get to the next step. I personally love the high level multifamily. I think it's fun. People think I'm crazy by saying that, but it's honestly like a game to me. It's how can we put the right people in the right place, find the right deal, analyze the numbers, um, work the deal the way it's supposed to, and just go from there. It's fun. I At least I think it is. I grew up with a background in real estate, making all of this a lot easier. Being a broker as well obviously helps because it's like talking to myself, ironically, which is funny about this call because I'm like, hey, you guys talk to me. You're already talking to a broker. There you go. And I'm probably gonna be meaner than most brokers because I'm trying to help you guys. Like I'm the nice guy that's gonna be mean to help you guys get better. So if there's any questions, anything you have on that side of things, please let me know. For people who haven't been here before, I put two links in the chat. One is a spreadsheet, and the other one is a Google Docs form. To explain what each are, uh, the form, wait, do I say that right? Yes, you fill out the form transfers your information onto the spreadsheet. The spreadsheet is a directory of everyone who's opted in to do the same thing, and it's kind of essentially our directory for MFC. Hey, half the groups are from Cali. I love it. Huntington Beach. All right, Dave, we'll connect soon. I'm in Burbank for those of you that know SoCal. So we're not that far, and I actually like Huntington Beach a lot more than I like most parts of LA.
It's a little cooler here.
Yeah, I like Huntington. Chicago, that's on my bucket list of places I want to go to. Anaheim, I love Anaheim. I love OC. Um, if I wasn't such a homer and loved Burbank so much, I'd probably be in OC. Um, Mario lives in my favorite place. For those of you that know Mario, he lives in Vegas. That's a joke. But I do like Vegas. So yeah, that's just kind of I breakdown of what those two links are, um, and essentially why I posted them there. Any questions? San Francisco, dude, half the calls on Cali. This never happens. We're converting to the west side. I love it, West Coast. Um, Mario, I guess, is an honorary Californian because you're close enough. Um, Dave, you've been we talked a little before, but if you want to unmute and just kind of introduce yourself, tell us what market you're interested in, tell us what your specialty is in the field of multifamily and what you're looking to get out of multifamily. I'd love to kind of see what's going on.
Yeah, no problem, Edward. Thank you for having me. Live in Southern California. I brand new to real estate, don't own anything, just got into this about 5 months ago. But love the opportunity here. I think it is certainly a vehicle for financial freedom. The markets I'm looking at right now are Tulsa, Oklahoma, Oklahoma City, and I just started looking at North Carolina as a state, so I haven't honed in on the market yet. Really, my goals are, again, as I said, just financial freedom, financial independence. And from my understanding of this area, I have plenty of family in real estate, most of them in single family, hate it. It's more than a job than anything else.
Single family in California or across the US?
I have family all over the US, so a lot of them have single family from 1 to 2 properties to up to like 10. And every one of them, I'm swear to God, not a single one says, "Oh, this is the best thing I've ever done." They're just like, "Dude, it's a pain in the ass." So,
I'm so for transparency, I'm dealing with the pain in that situation in California, which is why I'm kind of shying away from investing in California. Because before I was like, hey guys, let's invest in Cali. The appreciation is great, the equity long play is gonna be great. It's California, it's great. I'm always going to live here. I'm never going to buy here again. Bottom line. Um, two reasons beyond that. I love the numbers you mentioned. You said like 1 to 10 units, because that's around the sweet spot that I will avoid at all costs. I think Mario, we've talked about this, where if it's not above 15 to 20 units, I'm gonna pass. And even that I think is a little low.
no, I'm talking single
Um,
family though, right? That's what I
correct, but
mentioned. I
you
mentioned they have single family rentals. I mean, if, as multifamily goes, I don't think I would look to get anything under 50 or
yeah,
even a minimum of 70 just
yeah.
because of the property management benefit having that many units.
So and to that point, um, even if it's owning them individually, let's say like a single family, and you have a portfolio. I'll look at a portfolio. There's a few portfolios I've looked at as well, where it's like, hey, you have this many single family homes in an area. I'm not opposed to that as long as the number's more than 15 to 20. But I do agree. I've recently also gone to the side of go big, it's easier. But there is a climate check regarding that with it's harder to raise capital now. People are
Right.
more hesitant. People don't know. Like at the end, day, bigger is better, in my opinion. But here's just two problems aligned with that. I not problems. I would just call them obstacles or hurdles. And this is kind of just what the landscape is of the market. Um, if you're not getting an assumable loan, your rate probably sucks. If you are getting a assumable loan, the LTV is probably low. So that means you have to raise more capital. Um, so it's pick your poison. And I to say it nicer, it's pick the hard part of the task you want to deal with. Making your numbers fit under a 7 to 8% interest rate, or raising enough capital and having to justify the cash on cash because that's what it's going to be compared to on a 3.4% loan. But that 3.4 is at 45 or 55%, when that 7 to 8 is 70 or 70 to 80%, let's say, or 65 to 80, I should say. Um, hopefully. So yeah, I hope I wasn't too all over the place there, but yeah, I agree. I honestly, I've just to give a little background, actually, ironically enough, North Carolina is the market that essentially started this whole multifamily journey. Um, and then because I found a property there, I was 18 units and I didn't know what I was doing. Um, and then I just kind of fell into Florida, met a lot of people, MFC, I've met a lot of people in this community, and just kind of took off from there. And I found a home in Florida where everything in Florida is coming my way and I love it. So um, I focus in Florida. I have people in Atlanta. Um, I would like to do something in North Carolina. Texas, I feel like everyone just wants to do in Texas. So it's not I don't like it. It's just like if I can just flip it over, well, I might as well. Please post a Google form. Yes, I will. Obviously, if Mario sends me anything in Vegas, I'm always gonna jump on it. Uh, but that's just personal bias at that point. But I also like the market. I know there are some people that do too, some big players. I know Alex is big in Vegas because he lives there. Um, but it's also close to me. Yeah, Georgia. Yeah, for sure. I actually have boots on the ground in Atlanta. One of the partners on my Florida deals in that area. I know some people out there too. I'm down. I'm open to it. To me, look, here's the joy about doing it outside of your backyard. I'm in LA. Everywhere's far from me. Like everywhere, I have to get on a plane. I'm too lazy to drive to Vegas. You think I'm not gonna take a plane anywhere else? Like Vegas is a 4 hour, 6 hour drive on a bad day. I refuse to drive. There's no way it's happening. I'll take the 45-minute flight. So if that's the case, I'm taking a flight no matter where I go, regardless. I hate car rides. So if I'm flying to Atlanta, I'm flying to Florida, I'm flying to North Carolina, it's all the same to me. What's another 30 minutes to an hour on a flight? Like everything's on the East Coast for me. Like it's not like I'm in the middle and I can be picky about it. Like if I have a connecting flight, all right, whatever. We have lunch at an airport. It's not a big deal. If I have to do a red eye, I'll do a red eye. I look, I don't care. Like for trying, like I'm 30 years old. Like I'm good. I can go without a few hours of sleep. I can go with travel and airplane stuff. I don't mind. I love to travel, so there's that too. Don't love connecting flights, but it's fine. We tolerate. So yeah, currently in my kind of what I'm up to is I am in escrow, fingers crossed, closing end of this month on 120 units in Niceville and Valpraisa, Florida, Panhandle area, which kind of crazy how that came about and how the team kind of formed. That's a fun story where put yourself out there, put yourself around people who know things that you don't and have done things you haven't and are familiar with the area and have connections. That's a big part about all this that I've learned is I didn't even know the city existed before I found this deal, and now it's gonna be my first big deal like outside of the state because everything I own and have ever done was in LA. Being licensed here, my family always invests here. We have friends here that we've partnered with, so it's always like do it in your backyard. My family is very hands-on for the better or worse component of things. That's another thing. I know myself and I know like if it's something close by, I'm gonna try to be too hands-on on the management side, property management side, and the maintenance side, which I don't want to do. I've spent a Super Bowl repairing a unit. Mind you, I'm a massive football fan, so you can imagine how pissed I was. But that's just is what it is. But yeah, when it's far enough away and you can't do the work, that's sometimes a good thing. And you can't scale that way. I think that's the most important part. Like if everyone here's trying to do one deal, not saying that's not a big deal, but once you, I think the first one is the hardest. Like you've done the hard part. Why not go for 2, 3, 4, 5, 10, 20? Like you, the first one is 100% the hardest. And then you realize how quickly it snowballs after. But one thing I wanted to just kind of like bring up, I'm curious to get a lot of people's opinion. Luckily, you guys are all participating so far, so it's fun. How many of you guys, you can either raise your hand, put a number in the chat, whatever you want, or just volunteer and like give your opinion. How many of you heard a lot of people sitting on the sideline waiting for something to happen in the market? Like, oh, we're just gonna wait and we're gonna sit. Like, yeah, Mario, thank you. I see Sasha, you're nodding your head. Yeah. So does anyone have any comments towards that? You hear it all the time. Cool. So I'm not crazy. Thank you. Anyone have an opinion on that, just out of curiosity? Hey Dan, how are you? Good seeing you. Hope you had a good weekend. 2024 deals will come. Okay. I have two questions. Go for it.
I was just going to say that you hear the same conversation from a lot of the gurus and durus that are out here about what's going to happen with the tsunami of bridge loans and loans not being able to be terminated out and that sort of thing. I just did some search in my local market. There were like 7 properties that showed up on either the watch list or were downgraded with servicing. So I don't have a tremendous number of opportunities that at least are here yet. So I'm just curious when this is all going to happen and what that looks like, because I don't see anything on the horizon for me that says that there's going to be trouble in paradise.
So I have 2 points that I'm trying to make. Go for it, actually, before I get too far into it, because you guys know if I go on a rant, I don't shut up. So I'm going to let you guys go first.
I was just going to build on what Mario said. I think I've heard a lot of people quote bank data on when those fixed rate loans, for the most part, in the biggest volume, become due, and it's supposed to be between February and March next year. So people are going to have to refinance out, either raise additional capital to buy down the new rate, or they're going to have to sell between now and then at the biggest volume. But I think I commented earlier, there's already people that are coming up on those timelines even now. So I'm starting to see things come through already. It's just that the biggest volume will be the first quarter of next year.
And is everybody in as much trouble as the media says, Sasha?
It depends on how good they are at capital raising, right? And how good they are with their investor relations. So if they can smooth their investors and convince them to buy in for a longer term, then maybe, right, they'll be okay. But let's put it this way, it's not going to be a full market crash. It's just going to mean that people are going to lose out on some investments and others are going to win. There'll be winners and losers, but the everyday person won't feel it, I don't think.
So I have one big question on the market and people like sitting on the sideline. Sitting on the sideline, I don't think it's kind of like being like, imagine buying your first house or being a buyer for your home. I always tell people, why are you looking to buy? To invest or to live in? If you're looking to invest, then wait for the right deal. If you're looking to live in it, buy the house you fall in love with. Obviously, I'm only talking to one half of this equation. Buy the house that makes sense on the deal, right? So what makes sense? This isn't something like if you're doing it on your own and I'm gonna buy 3 units or 2 units in my backyard and I have the money sitting there ready to go. This is something where it's, hey, I need to prepare and make sure tell my friends and family, at least my friends' family. Like that's a bare minimum you can do. Hey, I'm looking for deals in the real estate market. I feel something coming soon. This is what I'm hearing a lot of people doing. I'm looking now. So when that opportunity arises, I can jump on it and I'm ready. Would you be interested to hear about it when that time comes for me? Or I find something I think is worth investing in? Because if you tell people at the time you find or identify your first deal, they're not ready to invest with you right away. And to be fair, you're trying to do so many different things, you're not going to have the time to nurture that lead. Like just family and friends, a 506B, very simple. Like, hey, the people in your sphere of influence, let them know this is what you're looking for on the capital raise side. Now, asset management, do you have boots on the ground? Are you the boots on the ground? Do you know property management companies that are boots on the ground? Because here's the thing. Everyone's going to get busy at the same time. It's like when rates were at 3%. I couldn't get my lender here that was doing residential on the phone because they were swamped with refinances and new buys for whoever was able to get a property under contract, but more with refinances. What do you think is going to happen when all of Dallas is selling and people need property management companies because they don't like the one that was currently operating it or whatever the case is? Who do you think is going to be busy and not have time on a call, especially if you're new to the game? Not saying that's a deterrent, but how much do you own now? Nothing in this area. Okay. How much do you own overall? Nothing yet. Okay. Then I come in, I'm like, hey, I have 120 units in Florida. We're expanding to Dallas. I'm in contract for another 88 units. The conversation is easier for me. That's why if you don't have the experience backing, and that's what I'm doing now, and I stumbled upon a deal. Like I'm trying to take the approach that I'm talking about right now. It's because you don't have, like, a lot of us, me included, don't have 5 years of experience. I haven't even been in real estate for 5 years, yet alone 5 years of experience. Like I got my real estate license maybe 5.5, 6 years ago. I started multifamily maybe a year and a half ago. I grew up in a household of real estate, so it's a little different, but on the education side. But in like practice, I haven't been doing it that long. So the kind of the point I'm trying to make is like, you have to prepare everything now for that. And here's another thing, because I was telling someone about this who big investment, raised millions of dollars in private capital to invest into deals. If the gurus or the talking heads, we'd like to call them, are on the sideline waiting, who do you think gets the best deals and who do you think is going to be ready to take those deals down when they are available? They're going to beat you to every punch. As much as I think I love boxing and fighting and I'm a bigger guy than most, if I get in with a 120-pound UFC fighter, they're going to kick my ass whether I like it or not. I could have 100 pounds on them. They will kill me. because they've been doing this a lot longer. I have no chance. So it's the moral of the whole story is like, start looking now. Pretend you have a deal now. Pretend the deal can fall into your lap tomorrow. I didn't know this deal was gonna turn into what it did, and it happened. You know, like I didn't even know where this place was, and I was like, "Cool, let's go." Like I'm obviously much more, yeah, let's go for the ride. I'm more risky than most, but that's kind of my spiel with it. I think if you're waiting too much on the sideline, it's dangerous. It's still good to put LOIs out, still to get your reps in, still practice. But I think the biggest thing you can do as well is, one thing you guys have probably heard me say to like before, and I've said this a few times, is make sure you're sharpening your tools that are going to get you a seat at your at the table. If underwriting is the only way you're going to get a seat at the table, you're not going to be happy where you're sitting. If finding the deal is the only way you can get a seat at the table, you're not going to be happy with the seat you have at the table. Those are all great. Don't get me wrong. But there's so much more that has to happen. Who's bringing the capital? Who's putting up the risk capital? Who's signing on the loan? I don't care if it's assumable or not. If it's a new loan, it's a higher number. If it's a assumable loan, it's a longer process. Pick your poison. Are gonna get the best deals. If they outbid you now with deeper pockets, they outbid you then. Yeah, that's true. And also it's getting the reps in, like making sure you know who's doing what. If you're joining a team, I don't recommend joining with people who haven't done a deal. Like even if someone's just been a GP and been able to observe, that's a lot they've observed. Ideally, you'd love for someone on the team to have seen a full cycle. Because that in itself, think about it, that's 5 years of experience at the minimum. Let's say 4 years if they got lucky. Like having seen a full cycle on a deal is longer than I've been in real estate. If my cycle, like if my full cycle is 5 years, that already beats me. You know, like I was 25 back then. Like I didn't know what this was. So that's a big part of the deal too. I think it's very important. I'm realizing just the way my deal has fallen to place now. Find a broker in the city you're looking to invest in and become good friends with them. And a commercial broker that's like credible and done deals. That goes a long way. Your broker and lender are going to be your friends. They're going to be very helpful to you in the life of a deal, but the broker is the one who's going to make sure you close. Let's connect. We'd love to connect with some brokers. Yeah, 100%. I think that's the biggest asset to like the team and like what we have set up in Florida is the broker's part of the deal. I have a very experienced asset manager who's going to teach me a lot because, like I said, this is my first big deal out of state. We have people on the team who know capital raise and know a lot of people that are in the capital raise space. So I'm a lot of reliance on them and confidence. And at the end of the day, like I know I cannot do this on my own. It's just not like you have to build a proper team around you. And I think that's huge. So the sooner you can prepare that, like the sooner you'll be ready for when a deal comes through. And I think it's important to identify your market, because it's ironic coming from me, because I just kind of went through like all look anywhere. Yeah, I do remember. Please send me a text. I lost a lot of my contacts. Long story. Anyway. Yes, it's ironic coming from me where I say I'll invest anywhere. But I am also a little more picky and like where I'll put my time towards, because I know if I don't have the team in place, or if the team I have in place isn't interested in that, or doesn't have the same resources we need to accomplish the goal, I'd rather put my efforts into somewhere where I already have built that base. Like, I'm not trying to reinvent the wheel by any means, and I'm also confident in the people I have on the team and the people I've connected with, that why am I going to try to go away from them? We sent an LOI and toured the property last week. I wasn't there. but I know the people who are there, and I trust them that they know what they're doing, because we did it on the first deal the same way. Like, I couldn't be there the first walkthrough. Like, it's not easy for me to get places. Mario, you're probably gonna have the same problem, and half this call that's in California. If you do a deal in Florida, you're not getting there quickly. Like, there's no which way about it. Like, if you don't know at least like a couple weeks in advance, that flight ticket's gonna suck. Like, it adds up quick. So that's big. Like, the fact that I have people that I know can drive there, although not ideal because it's not right around the corner, but it is a lot closer than me, is a big factor. So keep that in mind as well. Before I keep rambling on anymore, Dan, you just hopped on. You haven't had a chance. If you want to like talk, introduce yourself, bring something up. Have those deals been going? If you've had a chance to look at them, just curious what you've been up to.
Actually, I kind of feel this weekend was pretty unproductive for me when it comes to multifamily. So, by the way, guys, Dan Jason. So, I started up DK Property Group last year. 26 years in the military. I'm preparing for my exit strategy out of the military next year. So, started up DK Property Group. My wife and I are looking to invest in a multifamily. Been working really hard at perfecting underwriting. I think I'm doing pretty good, but not perfect. My market, so I do look around Massachusetts, even though we're a blue state. But I am planning to retire to Tampa next year, so I do look a lot at pretty much everything that's available in Florida, since that's where I'll be hopefully next year. So this weekend, like I said, it was a little unproductive. Had some work that I had to do on a duplex, install some smoke alarms and stuff like that. And then just, I spent some time with family. So sometimes that takes priority over, learning multifamily. So that's how things went for me this weekend.
No, for sure, for sure. So if anyone is looking in Florida, let me know. Reach out. Atlanta as well, Georgia in general. And like, I want to work with you guys. One of these days, I'm not for sure if this is happening yet, but for some of you that were on the call or have been on these calls for a while, you might remember David. He's a lot younger than me, so you can imagine how young he is. He's on my Florida team, so I would like for him to come and talk maybe one of these days and kind of like explain his story. I met him on MFC in this community. He's never done a deal, but he's helping me raise capital on this one and asset manage on this one. And I brought him on board because I was like, hey, you're close by. You do a lot of the stuff that I need help with. I want you in on the deal. And now he's a GP on the deal. Let's do it. Like, I'm down. Like, the more of that we can do, the better. Thank you. Thank you, James. But yeah, it's funny because the hard part may seem initially getting the offer out, getting it under contract. That's so far been the easiest part. The hard part's everything that comes after. It's a lot of stuff that comes after, a lot of time spent into marketing, meeting, making sure everything's operating, like running smoothly. And again, I'm trying to learn as much as I can in this process. So it's even more than that. Sasha, what have you been up to? Talk to me.
Scouring markets, so putting in as many offers as I can underwrite, to be honest. But I went to the Rod Cleef boot camp a couple of weeks back in Orlando. It's kind of interesting. I know you're looking at Florida, Ed, and I love Florida as well. But it was interesting that I would say a good 50% of the room at that conference were all from Florida because of where it was. And very few of those people, when I met them, were actively looking at new deals in Florida because it's so competitive right now. So a lot of the people there are very focused on the Midwest, which is where I'm looking. And so that's where I'm underwriting a lot of deals right now and submitting offers. So it's fun, but there's a lot to do.
Hey, Sasha, on that topic, it's highly competitive, but it's highly expensive as well. And who's buying in that area? Is it more institutional investors or large syndications? Do you know? Sorry.
Yeah, most of the people that I came across that were still able to do it were people that were so well networked that they were able to get off-market deals and pocket listings, and typically they were much larger, and so they were able to finance them.
So
Or they've been there a long time, and there were deals that just came from brokers they've got great relationships with, but they were fewer and further between. It was normally the bigger stuff that people were able to take down.
Right.
So you kind of mentioned what James was asking as well in the chat. So Dave, thank you for bringing that up, because the chat comment is, I'm having the opposite problem. Sellers aren't accepting our offers, higher offers outbid us. We're underwriting conservatively. Always underwrite conservatively. So you don't have a offer and underwriting problem. You have a deal sourcing problem. Like your offer is only as good as the other people that are offering on it. And here's another thing to remember, especially if they're local, or if you don't have somebody local. What's the biggest, look, every state, city, county, whatever you want to call it, has their red flag. In California, the red flag is a lot bigger because it's the tenants and the laws. You can't get around that. In Texas, I think it's property tax, if I'm not mistaken, and potential other nature issues. And then Florida has its insurance and hurricane problem. Everywhere has a red flag. Vegas has a different red flag, and that's because the city's crazy, but that's another story. But every city has its own red flags. How well are you connected to get around, not around it, but like have the confidence or know, like, hey, I know the right people to get me the best XYZ I need to overcome that obstacle. If it's insurance, make sure you know the best insurance person. If it's property tax, find a better deal. I don't know what to tell you. Get more creative with your offers.
Texas, even though property tax is a higher, but it is not on a purchase price, right? You don't have to disclose the purchase price.
Sorry, you cut off. I was having trouble hearing.
So in Texas, like you don't have to disclose the purchase price, so you can live with the old tax. You don't have to have the new purchase price as the tax, even though the tax is high, but you can still live with the old purchase price.
How often is it reassessed though? Is it
no? There's no reassessment. It's very like 1% or 2%.
So, for example, I know this in California because I live here. You get reassessed on refinance and purchase.
Not only that, it's California. They reassess every year. Depends upon the county you live. My county reassess every year. They go up like 6 to 7%. Sometimes 10.
What county are you in?
Contra Costa.
Okay, because for me, it's only reassessed on purchase and sale. Well, primary, it's a little different, so I'm not gonna get too far into residential. Okay, here's another thing that James started to change the subject, but I like James' comment. We're having trouble finding ACAP deals. Interest rates make the ACAP a requirement for us. Another issue. That's kind of like what I said earlier. You're forced with either A, finding assumable loan deals, where my assumable loan on the 120 unit is 3.6%. Does the deal make sense at new debt? No. Do I have to worry about new debt? Do I care what the interest rates are today? Absolutely not. Guess how long this is locked in for? 9 years. Even if principal interest period is over, it's still lower than a 7% interest only loan. So what the heck do I care? At least I'm paying something off. See, here's the thing.
So question there, but you have to find the difference, right? So for example, you're on a 3.5 cap, your interest is on 7. So that difference.
It's not 3.5 cap. It's my interest rate is 3.5.
Oh, okay. Your interest rate is 3. Oh,
correct.
Oh, okay.
Because it's an assumable loan. This loan was refinanced in 2019.
Oh, okay.
20, I think, when rates were 3.65, whatever it was. Luckily for me, it's let's put it like this: seller doesn't get the price they want if they don't have the assumable loan at the rate they have it. Nobody pays that price. I don't care who you are. That it just wouldn't make sense. Trust me, I'm underwriting it now at these numbers. I'm like, this makes sense. You double the interest rate, and I'm running away faster than I can possibly run, which is saying a lot in that sense too. Assumable loans and/or seller finance, unless you have an alternate low-cost source of private borrowing. Okay, to that point though, Sasha, your down payment, you're borrowing. See, let's say the LTV is 75%, where my LTV is 55%. My deal has to be strong enough where the cash on cash is justified. Here's the big difference though. I can negotiate and incentivize my investors differently, better than anyone else will find a way to negotiate with the bank or lender. I can't negotiate with a lender. I'm never gonna, like, they're just gonna laugh at me. Here's what it is. Take it or leave it. But with my investors, hey, this is our plan. These are the different ways you can fit into the pot, and we can make it a win-win for you and us. Let's work together. Hey, if I don't have to make money the first year, I don't care. I'm getting an acquisitions fee and I'm getting an asset management fee. I'm okay year one, because I'm not putting my money into it anyway. And if I am, it's money I was willing to invest. And now I'm part of the LP pool, so I get the same benefits they do. It makes no difference. I have to cater to them first. And then if the deal makes sense for us, like year 1 to 2, 1.5 to 2, you're probably rehabbing a big value add. Our rehab budget is $2 million. CapEx budget. I always say rehab, but CapEx is easier to differentiate. If my CapEx budget is $2 million, I'm not doing that overnight. It's literally impossible, but you get my point. Like year 1 may not look as pretty. That's fine. Because if I have a 20% equity split buffer, which is us, the GPs, then I'm fine. If I'm breaking even on my end, I don't make $1 year 1, aside from asset management and acquisitions, my acquisition fee. Look, in 4 years after that, we're good. Like I'm not mad at it. Again, personally, I'm at a different place than maybe other people, and I'm also like, hey, I'm gonna do so many more deals. This is just, let's see how it goes. Maybe on my 3rd or 4th deal, I have a different opinion, but hey, it's kind of the process of learning and doing multiple deals and creating that funnel where, okay, now we can get into the rhythm of, now I have a higher expectation. Like one of the key principles, the sponsor on this deal was like, the power of going through one cycle puts you in a position that very few are in. Like your REO now says your GP on this. You're almost at that 1% club now. Like it's pretty cool. Like that's really the biggest thing. And there's some people who just want to be on a GP deal and say, hey, I can provide XYZ. I'll take a less percentage just to be involved. Now, remember, so I kind of going back to circling, the point of all this is make sure you know like how you're getting a seat at the table and preparing on like I think the most valuable seat at the table right now is people who can bring capital, because that's hard to find. And I'm going to be honest, if you told me, hey, I have friends and family and I can bring $3 million to the table, I'll have a deal for you, guaranteed. And I'll have a seat at the table for you, guaranteed. Because you provide me more money, I know I can put out more offers because we're finding deals, bottom line, you know? Not everyone, like, for example, a lot of people on the sideline and whatnot, like I've put more offers in the past month and a half, 2 months than I actually had before that, to be fair. In escrow, I put in more offers than I thought I would, which is kind of crazy to think about. Let me see the chat real quick. Why would a lender lend below prime? What's the incentives? I never, well, see, what's funny is a lot of people ask, like, what are the rates right now? I have no idea. I don't know what lenders are offering because every deal I look at has an assumable loan. And the rest is capital rates. So that's just putting the right people around you and making sure you can bring the capital to the table. And that's networking. That's we should probably have a call about capital raise, or that's probably something that a lot more people I think that's one of the best skill sets you can have is knowing people and being able to raise capital. How you do it like the right way, it's Mario, you can relate to this. It's kind of like being a realtor. How do you be a good realtor? It's like just be good, like just be you louder. Like I don't know. Like it's a very tricky question. Like how do you be a better realtor? Put your face out there more and tell people what you're doing and what you're capable of doing. And if they trust you, they'll do business with you. If they don't trust you, then they won't. So yeah, for example, on this deal as well, besides not only the assumable loan, we have the seller who's also reinvesting a part of his sale price into the deal. So seller carry. That's a big component of it. Like we had half of the money required raised before we even open escrow. Any question? I know we're kind of not on the whole broker deal finding thing, but I also think that if people are scared to write offers and finding deals don't matter. And I think the biggest point I'm trying to like make on this call is one, connect with brokers and actually build a relationship. Like that, I think huge. Here's another tip. Find the broker that's a commercial agent, find their buyer's agent. Because let's be like for anyone who's called brokers, if you call a broker and they specialize in listings, for example, they're not going to turn down your business, but it's much easier for a listing agent to sell a listing than it is to find a buyer one property. Because the listing is always going to have more opportunity for them to make more money. You could double end it, which is one way, represent the seller and buyer. If you have 100 units, you probably have friends that have hundreds of units. Who do you think they're going to refer to as the realtor of the group if you do well with the sale of one property? Sure, if you have a friend or if you have a buyer looking to buy a property, they can only buy one time. If a seller sells a property, they have to 1031. They're going to sell and then buy something else after, and all of a sudden, you double dipped on one lead. Most commercial brokers probably like spending their time with listings. And those listings take more time, so it's a lot harder for a listing agent to chase and find something for buyer's agents. But every established and well, I guess like it's more experience and they've been in the game a little longer, they usually have a buyer's agent. What that is hey, I'm gonna go hunt for listings. I'm gonna go hunt for new business in this avenue. You go find more buyers so that we can merge the two. Or hey, maybe they like something and we use our network of brokers and other agents we know, where if we see something coming online, we have buyers in the pipeline that we can market it to. So you guys kind of understand how that like dynamic works. If you want to get in touch, it's like if you know a celebrity and you have like 1 degree separation, go be friends with their best friend. It's really the easiest way to meet somebody. You know, like, hey, I know how to get to this person. How do I get to that person if that person's so busy? Or sorry, my goal is to get to Grant Cardone, let's say. Okay, Grant Cardone is obviously much busier than most people and not the easiest person to get in touch with. So how do you get in touch with someone that's very difficult to get in touch with? You find their friend who's not as popular. It's just the reality of it. like I'm not gonna go chase the person that everyone's in line for. I'm gonna go find the person that's their friend that can get me in front of the line without having to wait. I'm also very impatient for anyone that knows me, so there's that too. Like I will find every way to get a shortcut in anything, just because I'm not that patient. So that's why I will always ask the person, like, if you go to a networking event and there's a guest speaker, they're probably gonna be there with a friend. Go be friends with the friend. They'll guess who's the guest speakers gonna come back to talk to? Their friend. Guess who's gonna be there talking to the friend already and have a relationship with them and have a rapport with them? You are. Guess who everyone's ignoring? The friend. Like it's just the whole idea. Like at least that's how I think. Like if you know someone who has something or doing something, like just go to their friends, and they'll lead you to them, or they'll know enough that they can sprinkle some info in, and but you be obviously have fun with it. So that's kind of like my big thing is find buyer's agents that are actually going to help you find deals that are off market, that work with listing agents that are actually finding deals and doing deals, because they love working with each other and they're gonna make your life a lot easier. Because you have two people working for you now, essentially. The buyer's agent is going to find deals and the listing agent is going to find deals. Beautiful. And guess who's happy if they bring you a deal? Both of them. Mario, how much easier would life be if you had a agent finding buyers for you and you're finding listings and you can just double end every deal? Like, come on.
Man, that's the dream. If you know somebody, let me know.
Yeah, honestly. I'll get my license out there. I'm down. Let's tackle. I actually do need to talk to you later on because I want to get some info on the probate side of things.
Hey, Edward, love everything you just said. You know what would be really nice if you can put some type of graphic together that shows those really simple, maybe 4 or 5 relationships.
See, that would have been a good idea if I thought about this before the call. I literally just thought about talking about this and said what I just said in the moment. So that's probably a better idea than, actually, it's a very good idea. I just didn't think I was going to talk about this. So we just kind of landed here. I'm very sporadic, as you guys can see. And I kind of like going with the flow of what the conversation is like. But I can definitely put something like that together. Actually, one thing I do need to do that I realized I didn't. I'm gonna put my email in the chat. So email me anything, any questions, and I'll try to put something like that with the graphic where kind of like the relationship of. Also, I'm pretty bad at that stuff, so it's gonna probably look bad, but you guys will get the idea. But keep in mind, like, I guess that's the biggest thing. Like, just reach out to me if there's anything I can help with. If anyone is looking in any market, see, it's kind of funny because I don't do broker outreach anymore, because in Florida, I'm like, oh, cool, I got what I'm looking for, and like we have a team and we know where to look. But if you're looking in a specific market I can help you with, please let me know. If you need help, obviously I do the underwriting Zoom tomorrow, so you guys know I can help you with that anytime. And if you guys are kind of just like, hey, I'm not sure how to go about this deal, or I need a property management company in Florida, let me know. I got you guys. If you guys are interested in joining other, like, hey, maybe you find something off market in Florida and you're like, hey, how do I navigate this?
So do you have anything on a legal perspective, like, what are the legal challenges we should know? I'm also new to this multifamily.
The legal what? Sorry, your voice is very low. Sorry about that.
I don't know what's happening. So like a legal, basic legal knowledge, we should know.
Legal knowledge?
Mm-hmm.
Dude,
at least let's say investor perspective, what should I know? What should I shouldn't doing? Things like that.
So that's probably a conversation for a whole nother Zoom. But one thing I could kind of, where the legality of things can get very messy and you have to be very careful, is when it comes to SEC stuff. What that means is when you're raising capital, like trying to bring money into a deal, and whether it's like a 506B, 506C, whether you have the so-called relationship with someone beforehand in order for a B to qualify. Let me give you an example. Why do you think when people who are big in the capital raising side of things, like, hey, I'm a capital raiser, I'd love to raise capital, I want to be everyone's friend, and they're very like, hey, let's go take a picture at the event. If you notice, the people who take pictures at the event and are like, especially people who have money looking to invest, they're doing that so that they can prove to the SEC if they get audited that, hey, I had a relationship with this person before. 506B works. 506B means you don't have to be accredited, which is big because a lot of people who don't invest may not be or know what that is, and they may not know if they are, whatever the case is. But if I know you personally, Mario, we've had a lot of conversations. I'm confident to say if you wanted to invest in my deal, 506B works every day of the week. Actually, a majority of you guys I can say that confidently about. But 506C means you have to be accredited. So as much as Mario and I may be friends, if he's not accredited, if I'm not accredited, I can't invest in his 506C. doesn't matter how much I want to put in. Well, obviously, you get my point. But the biggest factor of the equation is I have to fit into that specific box now. 506B is open season. Like, Mario, you're my friend. I'm your friend. Cool. We can invest in each other's deals. Because 506B doesn't care if you're a credit or not. 506B does care if you actually know each other. Like, I can't tell Mario's cousin, friend, neighbor, hey, invest in my deal in a 506B. I don't even know the person's name. That's not going to work. And if I get audited, I'm screwed. So legally, with the capital raise side, be very aware. Like, don't blast on social media, hey, I'm raising capital for a deal if you're 506B. That is the biggest red flag in the world. Because sure, you may know, let's be honest, anyone on Instagram or TikTok or any of these social media sites, you don't know everyone you follow. You may not have even met everyone you follow. And if the wrong person messages you, you literally have never met this person, or someone forwards your story or post to someone else and you don't have a relationship with that person, you could get in trouble. And it's not worth it, because you're not only putting at risk yourself, but the entire team and the deal that you've worked so hard up to that point on. So I don't want to really give more advice than that on the legal side, because I don't know if there's a specific thing you want to, like, you have a question about, feel free to ask. I'm not exactly the expert on any of this legal stuff. I'm just kind of, that's one of the biggest alarming and red flag things I can think of, because raising capital on the SEC is a place you don't want to mess around. So either ask like a lawyer or someone who has been through it before, like the process, and knows what you can and can't do. I definitely don't want to dive more into it because I'm no expert on it. Like, I'm just kind of regurgitating what I've heard, what I've been told. Like, I've been in mentorships where it's been discussed, but I definitely don't want to be the one to make the end all be all, follow my lead, I know what I'm talking about call. So keep that in mind too. But any other questions on that note, or in general regarding finding deals, structuring LOIs, anything like that?
Can you hear me all right, Ed?
Oh yeah, what's up, Peter?
Yeah, sorry, I wasn't available earlier, but I wanted to chime in on what you were saying just a little bit ago and give a real life example of how that works. I just spent 3 days in a seminar, Friday, Saturday, Sunday. It was Carl Allen. And some of you on here may know who Carl Allen is. He's a business buying coach. And this was an unbelievable opportunity for me. I was invited. I didn't have to pay anything. And everybody in this room paid $10,000 to be there. And I had an opportunity on Sunday. You know, we talk about that in these Zooms all the time. Ask questions, raise your hand, get known, right? Grant Cardone says that all the time. It's not who you know, it's who knows you. You've got to get known in these communities, and you've got to let people know, let them know what your superpower is, let them know what you're looking for. Well, they gave us an opportunity. Anybody who wanted to could stand up, could come up on stage. You only had 30 seconds. You could give your name and tell what's your superpower? What are you looking for? And the interesting thing about what you were talking about when I came on here, Ed, is exactly what I said from stage. I said, look, I'm brand new to the group, so I let everybody know that, because most of these people have been in for a little while, although many of them have just been, signed up 3 weeks ago, some of them 3 months, some of them 4 months. So a lot of people had only been in for several months. I said, look, Monday morning, I can't call Carl Allen. I'm not going to have his phone number. Even if I had his phone number, he wouldn't take my call, right? There's going to be gatekeepers to Carl Allen. But I said, I can call a whole bunch of you people. And I said, I don't know exactly how I can add value to you yet. I'm not going to ask you how. I'm not going to ask you to figure it out, but I'd like to get to know as many of you as I can so that I can figure out how to add value to you. And then I said, this is what I'm looking for, right? And I just said, home services businesses, roofers, plumbers, electricians, that's what I'm going to be looking for. So I got my 30 seconds on stage, and I was surrounded by people when I got off the stage, coming up to me, wanting to connect. And several of them, I mean, it's unbelievable. I didn't know what, a lot of people were asking, what's your buy box when it comes to buying businesses? Like, heck, if I know, I didn't even know I was coming to this seminar until 10:45 p.m. Thursday night. I showed up less than 12 hours later at the entrance to this seminar, said, I'm a guest of Abraham Gray, and they let me in. It was one of them. I've been to a lot of great seminars. This was absolutely incredible. The content was good. Some of it was fantastic. Some of it was only okay. But the networking was off the charts good. And it's just what you're saying, Ed, right? And I'm 1 degree separation from Carl Allen. I know several people that know Carl Allen really well, right? If I come up with a really good multifamily deal, I know I can get it in front of Vina Jetty. I know I can get it in front of Carlos Salguero. I know I can get it in front of a lot of people because I'm only one person away from those folks. Well, I didn't even know who Carl Allen was 2 weeks ago. Now I'm 1 degree of separation away from Carl Allen. I know a whole bunch of people that can talk to him directly. Right. So anyway, I just felt like it was 100% in line with what you were just saying. I just experienced it this weekend. So hopefully that's helpful to some of you guys to give a real life example of how it actually works. And I actually had people who didn't connect with me at the event, 2 separate people found me on social media today and reached out to me today, and they want to connect with me about, the specifics of what I said on stage. It's just unbelievable. Raise your hand, get known, become friends with the friend of the person you want to get to know, and add value to that person. And it works. It really does. So I know we're out of time. Ed, I'll let you take it home since you ran the whole show today. If anybody else, I'm sure I'm willing to stick around for a few minutes if anybody else has any other questions. I hope you guys got value out of this meeting today. Great to see some of you. I know many of you have been on here before. It looks like we've got some new people too. That's awesome. Mario, always good to see you. Sasha, good to see you. A lot of familiar faces. Love to see that. Cecilia, I think I've seen you around here. Bridget, I know I've seen you. A whole bunch of friendly faces. Dan, we got to connect last week, I think it was. We're going to hook up in Worcester the next time I'm in New England. We'll go grab a sandwich. I look forward to that. Anybody else have any questions before we get out of here?
Awesome. Thanks guys for the participation, because I didn't really have a plan coming into this, and you guys made it real easy. It's good seeing a lot of familiar faces and new ones. You guys know we enjoy doing this a lot. It's always good to connect. Please feel free to reach out to me. My cell phone number is should be in my name. Yeah, it's in my name. My Instagram is there. My email was somewhere in the chat. I'll put it again. But you guys are great. Connect with each other. Connect with me. Let's do deals together. I'm always looking to add more people to my phone book and contact. And if you guys ever have any questions, please let me know. Yeah, Mario, definitely. Can you send me a quick text, Mario, just to make sure? Because again, I lost a lot of my contacts, which is the worst thing that can happen to me. But whatever, it's okay. We'll get over it.
That's brutal.
Yeah, thank you guys again. Peter, thank you for hopping on as well when you did. Let me know if you guys need anything else. But other than that, I think I'm on tomorrow again. I don't think we've changed the Tuesday call to every other week, so I'll be on tomorrow. Underwriting, you guys know how it is. We'll have fun with that. Bring some deals to underwrite. Let me know how we can connect, and see y'all soon. Bye.